Russia just announced it's ending gold sales to domestic banks, not reducing them, not limiting them, ending them completely. And the timing tells you everything about what's actually happening inside the Russian economy right now. The official statement called it a temporary measure to stabilize reserves. The operational reality shows a country burning through foreign currency at a rate that forces hard choices between defending the ruble and maintaining the illusion of economic strength. When a nation that holds the world's fifth largest gold reserves suddenly stops letting its own banks buy that gold, you're watching financial stress in real time. This channel runs on no corporate funding, no government backing, and no advertising pressure telling us what to leave out. If this kind of analysis matters to you, the kind that connects economic policy to what it actually means for global markets and your investments, hit subscribe and turn on notifications, because what Russia just announced is the beginning of something much larger. Let me walk you through exactly what happened. On the morning of April 28th, the Russian central bank issued a directive to all domestic commercial banks. Effective immediately, purchases of gold from the central bank reserves are suspended indefinitely. No exceptions. No phase-out period. Just an immediate freeze on transactions that have been routine for decades. The official explanation came 3 hours later. The statement described this as a liquidity management tool designed to preserve reserve flexibility during a period of external pressure. Standard central bank language. Completely technical. Utterly boring. And if you stop reading there, you miss the entire story. Here's what the official narrative says. Russia is simply adjusting its reserve composition to better manage currency volatility. It's a prudent step. It shows responsible monetary policy. Nothing to see here. Here's what the operational reality shows. Russia's foreign exchange reserves dropped by $42 billion in the first quarter of this year. That's not a normal drawdown. That's not routine management. That's burning through reserves at a rate of nearly $500 million per day just to keep the ruble from collapsing. And when you're bleeding currency that fast, you don't have the luxury of selling gold to domestic banks who want to hedge against that same ruble you're desperately trying to defend. The contradiction isn't subtle. A country with economic strength doesn't need to suddenly freeze access to its gold reserves. A country with currency stability doesn't burn through $42 billion in foreign exchange in 90 days. The announcement and the underlying numbers are telling two completely different stories. One is public relations. The other is mathematical reality. Now let me show you the technical mechanics of what this actually means. Russia's central bank holds approximately 2,300 tons of gold. At current prices, that's roughly $130 billion in value. It's the fifth largest national gold reserve in the world, and until April 28th, Russian commercial banks could purchase portions of that gold as part of their own reserve management and client services. When the central bank sells gold to domestic banks, it receives rubles in return. Those rubles get taken out of circulation. It's a classic monetary tightening tool. It reduces money supply. It supports the ruble's value. It's central banking fundamentals. But here's what makes this freeze significant. By stopping these sales, the central bank is telling you it values the physical gold more than it values the rubles it would receive. It's prioritizing the hard asset over its own currency. That's not a routine adjustment. That's a statement about what the central bank actually believes about the ruble's future stability. The evidence gets clearer when you look at what Russia's been doing with this gold over the past 18 months. Gold sales to domestic banks averaged $1.2 billion per month through most of 2024 and early 2025. Consistent, predictable, standard practice. Then in February, sales dropped to $600 million. In March, $300 million. In April, zero. That's not a policy adjustment. That's a system under stress making emergency moves. Here's what they're not telling you. The reason Russia needs to preserve this gold isn't about domestic monetary policy. It's about international credibility. When you're cut off from dollar and euro clearing systems, when your currency isn't freely convertible, when sanctions limit your access to global markets, gold becomes the only universally recognized asset you have left. It's the only thing China, India, Iran, and other partners will accept without question in direct trade settlements. The Central Bank of Russia isn't stupid. They know that selling gold to domestic banks means that gold might eventually leak out of the country through private channels. A Russian bank might sell it to a client who moves it offshore. That gold becomes inaccessible for state use. And right now, Russia needs every ounce of gold it can keep inside its borders for the financial architecture it's trying to build outside the Western system. The pattern this fits into is larger than one announcement. This is the fourth major reserve preservation move Russia has made in 8 months. Last August, they restricted corporate foreign currency withdrawals above $10 million. In November, they froze certain categories of foreign bond redemptions. In January, they limited the ability of Russian companies to hold dollars in domestic accounts. Each move gets described as routine risk management. Each move is actually a pressure relief valve being closed because the system is overheating. Let me show you the math that makes this unsustainable. Russia's federal budget requires oil prices above $70 per barrel to break even. Current Urals crude, the benchmark for Russian oil, is trading at $62. That's an $8 shortfall per barrel. Russia exports approximately 5 million barrels per day. $8 times 5 million barrels times 365 days equals $14.6 billion in annual budget deficit just from the oil price gap. Now add the cost of the war. Western intelligence estimates Russia is spending $300 billion annually on military operations, production, and related costs. The Russian government claims it's $110 billion. Even if you take the Russian number, which nobody serious believes, you're looking at a combined shortfall of at least $120 billion per year. $120 billion in deficit spending, $42 billion in reserves burned in one quarter. The math doesn't get better from here. Russia started this conflict with around $600 billion in foreign exchange reserves. Sanctions froze roughly $300 billion of that. They've burned through another $100 billion since. That leaves them with roughly $200 billion in liquid reserves, and they're consuming it at a rate that gives them maybe 18 months before they hit critical levels. This is where the gold becomes existential. 2,300 tons at $130 billion in value represents their only substantial asset that can't be frozen by Western sanctions, can't be seized by foreign courts, and maintains value regardless of what happens to the ruble. It's the last reserve that actually functions as a reserve, and they just announced they're not letting domestic banks touch it anymore. The economic drain doesn't stop there. Russia's consumer inflation is running at 7.4% officially. Independent economists inside Russia estimate it's closer to 14% for food and essentials. The central bank raised interest rates to 16%, trying to control it. That makes borrowing prohibitively expensive for businesses. Investment has collapsed. The only thing keeping the economy moving is government war spending, which is exactly the thing creating the deficit that's burning through the reserves that necessitated the gold freeze we're discussing. It's a doom loop. War spending creates deficits. Deficits consume reserves. Reserve depletion forces emergency measures like gold freezes. Gold freezes signal weakness. Weakness accelerates capital flight. Capital flight burns more reserves. The cycle feeds itself. Now pull back from the immediate crisis and look at who's watching this carefully. China is paying very close attention to every move Russia makes with its gold reserves. Beijing has been on its own gold accumulation campaign for 5 years, adding more than 700 tons to its reserves. China understands exactly what Russia is doing and why. And China is drawing conclusions about the durability of dollar dominance and the necessity of hard asset reserves that can't be sanctioned. The message Beijing is receiving is clear. If you're going to challenge Western financial architecture, if you're going to operate outside dollar systems, you need gold reserves large enough to backstop trade settlements and currency stability without relying on Western-controlled assets. Russia's crisis is China's case study. Every mistake Russia makes, every pressure point that gets exposed, becomes a data point for Chinese financial planners designing their own de-dollarization strategy. Russia's gold freeze also sends a signal to every country watching from the global south. India, Brazil, South Africa, Indonesia, all of them are increasing gold reserves and reducing dollar exposure. They're watching Russia struggle to maintain economic sovereignty under sanctions, and they're learning that diversification away from dollar dependence requires having assets the West can't freeze. Russia's current crisis validates the strategy, even as it exposes the difficulties. Here's the dimension almost nobody is discussing. Russia has been negotiating with China and India to settle oil trades in gold-backed contracts. Not gold delivery, gold-backed, meaning the contracts are denominated in currency, but with an option to settle in physical gold if currency values swing too far. It's a hedge mechanism that requires Russia to actually have gold available for delivery. If Russia's gold reserves become untouchable because they're needed for domestic emergency purposes, those international settlement mechanisms break down. That's why this announcement matters beyond Russia's borders. The alternative financial architecture that Russia, China, and others are trying to build requires reserve assets that inspire confidence. gold does that, but only if it's actually available for use. The moment Russia signals its gold is locked up for emergency domestic purposes, it reduces the credibility of any gold-backed settlement system Russia participates in. Iran is watching this too. Tehran holds about 340 tons of gold reserves. Not massive, but significant for an economy Iran's size. Iran has been exploring gold-based trade mechanisms with Russia and China, specifically to bypass dollar sanctions. If Russia's gold becomes effectively immobilized by domestic financial stress, it limits Russia's ability to participate in the very systems it's been promoting as alternatives to Western finance. The geopolitical chessboard is being redrawn in real time. Every country that holds dollar reserves is asking the same question. How much of our wealth should we keep in assets the United States or Europe can freeze with a single sanctions vote? And the answer increasingly is less than we currently have. Russia's crisis is accelerating that calculation. The gold freeze announcement is evidence of the problem. It's also paradoxically evidence of why gold matters. Russia is desperate to keep its gold precisely because gold is the only asset that still functions as money when everything else gets weaponized. The Russian central bank knows something else. The global financial system is becoming more fragmented. The unified post-Cold War order where everyone used the same currency systems, the same clearinghouses, the same international banks, that era is ending. What's replacing it is a multipolar financial world where different blocks use different settlement systems, different reserve assets, different currencies for trade. In that world, gold becomes the universal translator. It's the one asset every bloc recognizes. It's the fallback when currency systems don't align. That's why Russia can't afford to let this gold leak out through domestic bank sales. It's not just about supporting the ruble. It's about maintaining the means to operate in a fragmented financial world where your currency doesn't work and the other side's currency is sanctioned. Gold fills that gap, and Russia just announced it's not sharing anymore. Here are my 3 predictions with a clock attached. First, within 60 days, Russia announces new restrictions on foreign currency held by Russian corporations. They'll frame it as patriotic. It's actually the next pressure valve that needs closing. Second, before the end of summer, we see the first major Russian company default on dollar-denominated debt because they can't access the currency to pay it. The reserves aren't deep enough to bail everyone out. Third, within 9 months, Russia and China announce a formalized gold-backed trade settlement mechanism specifically designed to reduce reliance on currency reserves that keep getting depleted. They'll have no choice. The stakes here extend beyond Russia's economy. What burned through $42 billion in reserves in 90 days isn't just military spending. It's the cost of trying to maintain economic sovereignty while cut off from the global financial system that's denominated in currencies you can't access. Every country watching is doing the same calculation. How much would it cost us to operate independently? How much gold would we need? How long could we last? Russia is providing the answer in real time. And the answer is, it's brutally expensive. It requires more gold than you think. And even then, you're buying time, not permanent solutions. The gold freeze announcement is Russia admitting it's running low on time. Drop your prediction in the comments. Which happens first? New corporate currency restrictions in 60 days, a major debt default before summer ends, or the formalized gold-backed trade mechanism with China within 9 months? Tell me, because I read every single one, and the conversation in the comments often adds layers I didn't cover in the video. If this gave you a framework for understanding what Russia's gold freeze actually means, not the official statement but the structural reality underneath, share this with one person who needs to understand why reserve composition matters and what it signals about the financial system we're all operating in. The next video goes somewhere even this one didn't reach. We're looking at what happens when dollar dominance doesn't collapse dramatically, but erodes gradually, and who benefits from that slow motion shift. Subscribe so you're there when it lands.